We are live. Welcome everyone to the second episode of the Futurum Equities. I don't know. Do you want to call it a podcast, fireside chat? It's just, I don't know. It's a session. Let's just call it a session. You got myself, Shy Balor, Stocks Heavy Shy. We got Danny Dimes, aka Daniel Newman, over here. What a week! I gotta say, all-time highs across the board. SPY, QQQ, Nvidia, TSM. I kind of missed the Bears a little. I think the Bears got it wrong again. I kind of want to pass to you right off the bat, Daniel, of like, were you? I know you were one of the few on Twitter that was not surprised that we're going to hit all-time highs. Like, you anticipate the V-shaped recovery in April from all the FUD that the AI Bears were screaming. So, like, give us some context of how you were able to see the signal through all the bear FUD that was every headline in April.
Yeah, I got to figure out what the Danny Dimes thing is, though. You're going to have to tell me. Is it because I'm a 10? Is it because I'm a 10? Is it because my stock picks are 10 out of 10? Is it
Oh,
because
yeah. That's a better one. Yeah.
I see the future, and every time I can drop a dime everywhere I go? Um, yeah, so I mean, look, it's before we get to AI bubble bears, right? Let's just go to the kind of April to now and talk a little bit about what happened there. Like Liberation Day. I mean, um, it was like one of the absolute highest peaks of uncertainty. We saw a VIX spike that looked not that different than what we saw, when the shutdowns for COVID came. It wasn't quite that bad. Bigger than the Japan carry trade, less than the pandemic spike. I don't know if I can say that out loud. Is it going to ruin all of our reach for even saying that word? I don't know. But the net of it is that you kind of saw what's happening. And so like 2 days after this, I wrote an X post, and I got to go back and find it. But I basically said, like, here's the 11 things that are about to happen. And the first thing is you need to read history. So people don't read history, but they should. If you read history and you just learned even a little bit about history, learned a little bit about Trump, you would know that everything about him is this whole escalate, de-escalate strategy. Like everything with him is like, you sent out a post this morning. They talked about, like, I'm going to tell my girl I'm going to go to Vegas on a bender just so I can end up getting the weekend off to play golf. Like that's
what he did.
President Trump's negotiating strategy is you basically ask for the most unreasonable outcome. And then you get people to basically accept what would have been considered a really good outcome in the beginning. And so love them or hate them, that's what is happening right now. Is we landed, a China deal. We'll talk more about that, like about 30%. So I kind of put the play-by-play, and I said, what's going to happen is, the only thing I really got wrong, and I'm not sure, is I really did think Doge, which, by the way, what happened to that? Like, remember when we were doing Doge? We talked about it all the time. I thought Doge was going to have a bigger part to play in this outcome that we got to, because I did think we had a ton of unnecessary spending. We're going to start pulling that back. But we've had huge tariff revenues coming in. Inflation has been inconsequential. Now, will it come later? That's still debatable. Like, will it end up coming? It's looking like it probably won't, because most of the high-cost goods with these big tariffs have pretty much shipped and landed, and they've been absorbed in that first era of the supply. And now we're getting to fairly reasonable tariff levels with most of the biggest trading partners that we have. And so this is kind of like, I told the story of how this would play out. And I mean, I'm telling you, the amount of Haterade I had to drink, like people absolutely,
I saw it. Yeah.
The Trump delusion, though, is so real. Like the saddest thing, and I shared this yesterday. I actually shared your post where you showed the video of Trump talking about China, which was weird that it took him a day or two to announce something this big. Like, when has he ever been one to put a big win in his pocket and be like, oh, I'll talk about it tomorrow? Like, that's so not Trump. But like, I shared the post, and I'm like, look, in the end, you don't have to like the guy. Like, there's a lot of things I don't like about the guy. Like, personally, like I actually admire a lot of things he's doing as a president. I admire how he's handling a lot of diplomacy issues. But like, some of his personal decisions, at least as I've heard about them. And again, we got to know, I don't know what's real because I'm not in his circle. But having said that, like, you should want good things. Like, we should want the markets to rip, unless you're a short, and then you're a moron anyway. And you should want, the U.S. to be prosperous. You should want, tariff and tax revenue to create more equilibrium in world trade. You should want peace in the Middle East. We should want the Strait of Hormuz to be open and oils to flow. Like, it's so weird to me that we've created such a sort of bifurcated society that we actually root against our friends, family, and loved ones, their well-being. in the spirit of getting a W, which in our mind is merely a W, is when someone you don't like personally because of a bunch of stories you don't even know are true or not, is you've made some personal decision and now you're so convicted by it that you just roll with it in perpetuity. Next time, just buy HIMS or SoFi. You'll feel better.
I do feel like I missed the complete boat on it. Like Daniel has been telling me all year, probably even longer, buy HIMS. And I was like, I just don't see it. But I've been wrong. I'm clearly wrong on that stock. I think I'm wrong in the healthcare sector. What was another name I couldn't see? Oscar. Oscar's another one. I was like, I just don't see it. So I think I'm just a little too close in that.
Can I
But
be clear on that one, though? I did invest in it. I don't know that I believe in it that much. But what I have found is FinTwit can be really, the
so
research that
powerful.
others do can be really good. It can be super powerful. And I was just literally testing this momentum on FinTwit trade. And I'm like, the fundamentals were good. Like the company is undervalued. It actually wasn't that hard to see that based on its IPO, where it fell to, and that there's some undervalue. But this is one of those where it's like I didn't do the same amount of research as I've done on other companies. I really did just play the momentum. And I said, you know what? And also I didn't make a huge buy. This wasn't like HIMS or SoFi where I'm like 6-figure share count type of investments. This is a more concern. But I'm like, you know what? I'm going to ride this because this is one of those that like if it goes from wherever I bought it, like 19 to like 40, I'm going to be like, oh, I was pretty smart. I doubled my money. And if it goes from 19 to 10, I'll be like, oh well, I lost a few bucks, but like it was kind of fun to play. Remember,
totally.
No crying in the casino. I mean, that's the rule, right?
Well, you also told me an interesting like a line regarding the HIMS dip because you participated in the HIMS dip and
I
it's
did.
bearing fruit now for you. Yeah. So I think there's like the Novo Nordisk new CEO. He drops this bomb of an allegation weeks after this partnership they've had. There's always more to the story than what the headlines say. Yes, maybe he just wanted a new partnership arrangement between HIMS and Novo, and the only way to save face is by just pointing the finger and doing something really aggressive towards a potential future disruptor in his space. I don't know what it might be, but either way, the V-shaped recovery of 25% since the bottom just a couple days ago, I think it's showing, or the market's not believing the slander that Novo is really saying towards HIMS. It's more of a play theater probably, and I'm happy to see that it's V-shaped. It's like, was it above 50 now? Actually, I didn't
It's been like floating. It looked like it could be like a total ripper. It's definitely moving. It's been right around 49 to 51 all day. So 5 to 8, 9%. It hit like 12% for a little while today. Definitely has that setup of a short squeeze. There was some point yesterday where it had 0 shares available for borrowing. 0, meaning it was shorted so heavily. And with a name like this, it doesn't even have to be based on reality. It can be totally based on just momentum, just literally having that retail power behind it that, you get the pump going and the shorts have to cover. And so like if the shorts started having to cover, this thing could move right back to 65, 70. But here's the thesis that I had just going back on this whole thing was, look, both companies had an interest. And it was very obvious to me before I even saw Andrew Dunham's comments about this was there was a new CEO at Novo. The new CEO probably didn't like the deal. Okay. There's another thing that's obviously going on. There's just a ton of pressure around this GLP space. There's a ton of competitive pressure. The companies that didn't get in on it are trying to get in on it. The ones that are in on it are battling against this compounding issue and this compounding pharmacy issue, which is kind of like, one of these where the compound pharmacies are constantly outrunning the deal because like they compound it and they change the ingredients. So they're not copying it exactly. Remember, this GLP drug was a long-term diabetes drug. This is not a new thing. This is pretty safe and tested. HIMS is not the only ones doing this, but there was there's an interest in a company like Novo to try to put FUD and doubt around a company like HIMS right now because the pharmacy doesn't want you buying $200 a month GLP-1s compounded when you're going to spend $2,000 a month. You come out of healthcare, so you know how this whole system works. So there was a lot of self-interest in, in this being something that hurt HIMS. On the other side of it, of course, it's never one-sided. Like HIMS probably overpromised in some way what it thought it could deliver. And by the way, it's hard for them, if they are a client experience focused technology healthcare platform, to say, look, we're going to push Wegovy over our compounded offerings at 10 times the price. Like, it's hard for them to do that because they need to deliver the best outcome. It's like they're probably selling a lot more generic Viagra than real Viagra. They're probably selling a lot more compounded semaglutide than than the real thing, than the real branded prescription versions. And they're probably selling a lot more fake Propecia, or not fake, but like generic Propecia than the real Propecia. So bottom line is that there was just a lot to see, that Novo had a lot more to benefit. But here's my big play. Hims buy Viking Therapeutics and put an end to all this.
Wow. What a purchase that would be.
I mean, they could do it for a few billion. I think they want about 10 or 15, but like that, have you seen the efficacy on the Viking? I mean, that stock is way repressed, but like.
So question for you though, if they did make that splashy acquisition, would that remove the Netflix narrative of like they're going to be the Netflix of healthcare? Because then competitors just will limit the resources that you can put onto Hims marketplace. I think it would be a pretty big pivot on strategy.
It'd be a huge pivot. I mean, I'm not going to proclaim to have, like, this is one of those where I'm sort of swimming in the deep end a little bit. I'm just saying, I mean, the semaglutide and GLP thing, it feels like it's going to be this pervasive race against kind of compounding in the brands. I think the market's worried about a lawsuit. I think Novo and those companies really have to think about, like, do they want to get into a long drawn out court battle over kind of this? Because again, they're not selling the exact formula. The compounding, they'll add things to it and make it just slightly different enough.
It's a China playbook, yeah.
It's a race, and it's like anyone that's run a business, and I can say this as someone who does, like, you will constantly be in lawsuits. That's just part of it as you grow companies. People can, jurisprudence, people can sue anyone for anything. But the net of it is that it's a terribly distracting use of resources. And by the way, Hims has all momentum, and Novo is not really all that interesting to anyone outside of institutions. So, Hims is a powerful brand right now, and it's got a ton of momentum. And like I said, you can't underestimate retail momentum.
So I've been in those rooms, in the corporate strategy rooms, when you get a CEO like Andrew. He's hyper disruptive. He wants to disrupt a dinosaur of an industry. He loves the fights. Like he goes for the fight. I think right now is the point in Hims' journey where maybe they slow it down and tighten up some of their stuff they have under the hood. Don't be so disruptive. Like, don't focus on speed. Like, focus on more on clinical legitimacy, trust. Like, maybe pause the aggressive GLP-1 marketing, because I do think that's the biggest narrative overhang on Hims, that GLP-1 thing, which is it's not just a GLP-1 company. That's the frustrating part, but it's the same thing as Google. Google is not just a search company, but when you have that narrative that's pinned to a stock, it takes a long time to phase that out. So I think that in order to like help the bottom line and like make the narrative in your favor, like just pause the GLP-1 marketing spend and reduce that S&M that you have, which is significantly high. And then you have that margin expansion. I think you might catch a little bit and let the GLP-1 phase out, because you have so many different products out there that maybe the attention starts going towards there.
Yeah, I will debate you. I understand, and you've got some great experience. I'm not going to push on that, but I will say that is the old guard of healthcare thinking coming out of you.
Maybe that could be United Healthcare.
I think that they need to go fast and break stuff, and basically build that incredible brand affinity. Get investors that love what you do, feel like you're never going to allow the market to catch you, and to always be on the front foot. And again, they also, their growth is incredible. Like, the Novo deal wasn't even old enough to have impacted a single quarter yet. And so, like, we'll see in the quarter, but their growth rates are tremendous, and their continued TAM expansion, their growth rates, their margins, their earnings per share. I mean, you look at the charts on this thing and you're like, yeah, it's expensive to some extent, but this is no different than like a Palantir when you kind of look at how it's going to grow into it. And it's not as expensive as Palantir. So it's and by the way, in a field where, like you said, we may have AI that will replace all of us as workers. You may not need a Stock Savvy Shay to do a podcast because you can have Stock Savvy Shay bot do the podcast. But and I say this with a little bit of humor, so I hope everyone can appreciate this. But and I know it's hims and hers, but men will always want to have hair, even me. Okay, men will and women will always wish to be thinner than they are, and men for sure will always want to have more sex. And so that company is like, in those three buckets, man, that is AI proof. They can add AI to make the technology better, but the things that they are powering, in wellness and personalized medicine and basically enabling, the personal improvement experience that most people want. And by the way, doing it privately from your own home without having to go to an office, without embarrassing yourself. I mean, you can't underestimate the value of that.
Oh my God! In the waiting room, like having to ask for Viagra, like not
making
having
that
to go through that.
accessible to you, making that so easy to access. And the expansion of TAM is the limit. I mean, as things, as new opportunities, I just, again, it's so out of my league because like I buy stocks a lot of stocks that I'm in tech and I work with all these companies. So I can't buy a lot of these companies I have NDAs with. So like I have to pick these names like Hims and SoFi, and I become super passionate about them. So.
No, it's awesome. I mean, listen, I'm a little too close to healthcare, and that's why I missed Hims. I just thought Amazon's going to be too disruptive because telehealth is just two things: convenience and pricing. And what is Amazon? Prime. The logistics network is unmatched, and they can underprice everyone. But I've been wrong so far. So like, let's get away from telehealth because our edge is AI. And I think AI is what's carried this market to all-time highs. You can maybe make the argument geopolitical tensions reducing help. But I'm like, I think the push was truly the AI spend. It's significant. I don't want to say it's a blank check, but it's the closest thing to a blank check, the amount spent towards AI data centers. So I want to pass it to you on what made you kind of maintain that bullish stance that you had throughout the whole pullback in Q2, that AI is here to stay and data centers will continue accelerating. It's not as easy as, oh, I'm a CTO. I'm going to pause because of geopolitical tensions and all the billions I spent will be at risk because I'm not going to carry the momentum.
Yeah.
Yeah.
So Futurum, if you haven't signed up for our equities newsletter, you should. But remember AIR, right? Our whole theme is AIR: access, insights, and research. Well, I'm in the room with 150 to 200, big tech CEOs usually every quarter. I'm have the chance to spend time, and when you're around really smart people, the best thing you can do is listen. And so as I listened, I mean, literally, I think the day after Liberation Day, I won't reveal who, but it was one of the CEOs involved in Stargate, and I actually called him up, and I said, what do you think is going to happen? Like, and we had a long conversation, and I won't reveal who this is, but like, what he said to me is basically in so many words, AI data center build out is tariff proof. And this was like a day after that effectively. And I mean, it wasn't a single, I called several peers and other CEOs, and I will say there were varying levels of concerns. But when I was having these conversations, there was just such abundant confidence. And by the way, this comes after, having been in Davos, spent time with a lot of the biggest technology companies, service providers, CEOs, and I just saw the momentum. We just gotten done with a survey with 220 CEOs of billion-dollar companies, and the AI momentum was like palpable coming into the year. Tariffs had sort of paused it. So then it was like, does tariffs stop it? And it was like, no. And so what I realized is like, look, companies that are in this space have massive operating leverage. And so if you go into a moment, whether it had been like the 2020 moment, whether it was the 2008 moment, the 2001 internet moment, and you are a company that had a strong balance sheet, tons of cash at your disposal, and you're like looking down the barrel of a secular trend that's going to determine the next 3 to 4 decades of global economic leadership, and you're like, wow, well, all the small, medium companies are worrying about how they're going to pay their tariffs, how they're going to keep funding their employees and payroll. We've got X billions of dollars on our balance sheet. Maybe this is the perfect moment to keep building, to basically make sure that we come out ahead. So I was absolutely sure. And then, of course, you do all the other work, Shai. You do the channel checks. Are these CapEx numbers real? You started to get the reinforcement of CapEx numbers as the earnings started to come out. You heard from Google and Meta. You got the big reaffirmations from Microsoft and Amazon. Like, nobody stopped spending. And so then everybody's like, well, it's a bubble. They're just going to build it. No one's going to use it. And you're like, I don't think that's true. It's like, I use it. I see what's happening. And like I said, do I have some concern about I do think the software industrial complex we can talk about this, like some major erosion coming as we know it. But the infrastructure build out, and by the way, this was all came to an absolute moment for me when I was at Milken. I spoke at Milken. You and I hung out while I was there.
Mhm.
And when I spoke there, I had a room of 40 capital allocators. And it was including guys that are doing data center build outs, some of the biggest banks in the world. And what they told me at that conference was effectively there was more money chasing data center build out deals than there were deals. That basically there's so much money that wants to get in on power, chips, infrastructure, anything that can tie to this massive data center boom. They're all chasing it. So it's like you start putting all these things together, and it's like this trend is not going away. Tariffs, wars, it's not going to stop because basically the wars will be fought with AI. The world's the most deflationary asset we're going to have is technology. It's been deflationary for the last several hundred years, and it's going to continue to be. So even if we have a major economic pullback, companies can get rid of people and use more AI and keep delivering earnings.
That's whenever people bring that up to me, I always roll my eyes because they always bring it back to prior revolutions. .com era, cloud, 3D printing is not a revolution, but let's just say 3D printing. Those are all products. AI is intelligence. Intelligence is highly scalable. It's going to cause structural shifts across every industry. That doesn't slow down. The AI train does not slow down once you are infusing a new characteristic into the world. Everything else, every other revolution was just a product that improved efficiency. This is truly the only revolution that's offering intelligence that's replacing a lot of the structure that's in the world right now. You don't pause that because of some heartburn that's happening. So I think that it's very early in that because AI is going to only gain more and more momentum. And I think also what people are misguiding is how disruptive it's going to be in the workforce. And this is a topic I actually want to talk to you about, Daniel, because you are a CEO of many companies and you are in the chair that probably has to face these kind of conversations internally, where I think it's not going to replace headcounts, but it's going to force a lot of companies to change their priorities. And what I mean by that is, let's say if you're an accountant and Excel got created, so no more just manually doing accounting work. It's going to be on worksheets. What happened? FP&A got created, financial planning and analysis. So a new kind of work got created based on the innovation from sheets. That's what's going to happen, in my opinion, in the future because of AI. It's going to probably replace the current workforce of specific titles, but it's going to create so many more teams to capitalize on making sure you have AI at its max potential. So I want to pass it over to you because that is a narrative that's very popular and like AI is going to disrupt white collar jobs. I think it's going to evolve white collar jobs into something completely different.
I think we're hearing a few different sides of this. 2.5 years ago, Arvind Krishna from IBM came out and made a suggestion that there would be jobs replaced and displaced with AI, and he was absolutely roasted for it by the media and the press. This week we heard Andy Jassy come out and basically say we will have a meaningful slowdown, or actually we will be able to grow with less headcount. So, and then you've heard, I think the stats, something like 8% fewer computer engineering jobs than just a few years ago. So despite the fact that, we kind of hear that programmers may or may not be displaced, there's starting to be some signs that the volume of computer science and engineers, we're already hearing maybe you don't want to major in that. That may not be a future. So there's a structural change that's going on that, Microsoft's letting people go meaningfully several weeks in a row. They've had pretty big layoffs, and a lot of the indicators are it's AI powered. I mean, they're just finding that a lot of things can be done by AI. I've talked to other CXOs at companies that are basically saying, they can get 10x productivity with the same number of headcounts. Mm-hmm. So they can't actually, they can get benefits. So maybe to your point, like as we gain overall GDP or overall economic, productivity numbers grow. We've heard numbers north of $20 trillion by the end of the decade that AI will power. The question is, how many people does it take to do that? And so, I'll give an insight. Like my own anecdote is like, we do a lot of content and research, right? And so, I won't disclose all of our secrets, Shai, but I was showing you some tools that we're building, right? We're building AI powered tools. And I'm building tools now that can say, hey, give me Shai Balor's perspective on, Microsoft's delay of their new Maya chip. And you saw, I mean, it's not 100%, but it's like 80, 90%. And it's like, it's pretty good. And I could use this. And so the thing is you could have it generate 1,000 of those at a time. So there is some very real reasons to believe that jobs are at risk. The other thing too, just to mention, is there's never been a time in history where both physical blue collar work and white collar work were under duress from technology. Okay. Historically speaking, it's been kind of this shuffle, and we've seen it, and this was the own industrialization of the United States, was we went from a very blue collar to a very white collar society. That was the goal. We all went to college, right? You went to college because nobody wanted to go to trade school. And now people are kind of joking, maybe you do want to go to trade school because you might have more longevity as a plumber, because the robots were further away from having a robot that can fix your plumbing or build your house or install your pool, than we are from, an AI worker, an agent that can, file an insurance claim, or that can write a press release, or that can, do a FP&A spreadsheet for you. I had one very, very large customer tell me they worked with a large consulting firm, one of the big four, on a project, an AI project. And then they also asked OpenAI's deep research the same question and to develop content for them, a research report on the same question. They sent the advisory consulting big four firm 3 weeks. They worked on a project. Deep research did a better job with no ingestion, no custom data fed to it, just using open, publicly available data. They said they got a better outcome from the deep research report than they got from 3 weeks with Bain. Oops, I need to pull that back up. Anyway, it doesn't matter. I won't say what it is, but yeah, it was Bain. But the point is that so this big four firm, basically, from what I heard, now, again, I'm not going to say who the customer was, but the long story short is that OpenAI outperformed it, which is incredible. I mean, it's incredible to think. So when you go, could this take jobs? Absolutely. But my more optimistic side of this says, over time, I do think there will be new economic opportunities created. So when Mark Benioff said yesterday, like 30 to 50% of the work is being done now by AI, right, at Salesforce. So we shared that on the Futurum Equities account. And he says that augmentation is allowing people to do higher level work. Well, what is that? Like, so if the manager is doing the director's work and the director is now doing the VP's work and the VP is like, what is the upskilling?
Yeah.
So the one thing I definitely advise everyone out there is like, look, learn to use this stuff. Like, use this as a differentiator to scale yourself exponentially. Like, the amount of content that we can create, we can go parabolic in terms of the outputs.
No, I mean, I've been writing about this week, especially because I think a lot of headlines are saying how disruptive AI is coming for your job type narratives, and I'm like, it's not going to mean the end of work. I think it's going to start a new class of builders, because it's all about productivity. AI is going to increase so much productivity going forward that the cost of capital now for an employee is kind of minimal, because they can do more with that specific seat in their organization. So I kind of want to ask you this. I just looked it up. Amazon has 1.5 million workers globally. In maybe not Amazon. Let's just say Google. Let's just say Google has 500,000 workers. Do you think that number is going to be higher or lower by the end of the decade?
I think they're closer to 1 million, by the way.
No, I was just making out.
I think Amazon has closer to 1 million workers. I could see a very realistic situation in which they could be 2 to 3 times the size with the same headcount.
That's exactly what I think too.
Here's a couple of things to think about too with an Amazon specifically. Autonomy. So a lot of their employees are drivers. Not going to need them as many of them. Like, they may have some drivers, but like, it's very clear. Foot and other type of delivery services, drone delivery. That will likely take a certain amount of feet off the street in urban areas and different places where drivers are moving higher volume in narrower spaces. You will have, if you look at the factories are already loaded with robotics, but they'll next level that. They'll have even more robots and even fewer. I've been in some of their future warehouses and I had the opportunity to spend some time. It's incredible what they're doing, but they can do even more of it.
Well, can I ask you this? Because I'm always Amazon's the top 3 position for me. I have a weird take on them because it feels like their retail moats is making them just an enabler of all these tech revolutions like drones and physical AI. But they're not really owning anything much. Why don't you think they own their own model or trying to figure out the Optimus angle? Like I think they're just gonna order a ton of Tesla Optimus, and like whenever drones become a reality, they're just gonna enable those drones for their retail. Like, why don't they want to own things internally? That's something. And
Well, okay,
same with the model. They don't
so
own models at all.
so there are some things that to make sure that just they haven't done maybe as good of a job of always articulating, but I mean, they've built advanced robotics in their factories. I'm sure they've borrowed and used some technology from others. But you ever go to one of their factories and you see the robots roaming around the one of their commerce centers? I mean, they've been using robotics
700,000 of them. Yeah, they have
for a very, very
700,000.
long time.
Yeah.
And I mean, they do. I mean, they have Titan models, LLMs. They have um, the Nova models. They haven't necessarily been successful in some of these things to the same scale because they invested in Anthropic and they're building Nova, they're building Titan, but they have stood up their own models. They've also stood up their own infrastructure. I mean, they have chips. They built a massive
Tritium. Yeah.
ARM-based with Graviton, Tranium when they bought Annapurna Labs. So they are building sort of full stack. And of course, they've tried. They haven't done great on software. They've tried on software. They had Chime and some of these different tools for collab. But I mean, they're building their own ad stack. So in the advertising space, they're building generative tools where very much to compete with the Metas and the YouTubes. And they've built a $40+ billion advertising business. So I don't know that they built a logistics network. They built their own trucking and carrier and 3PO. So they've done a lot of things that they've built, but I don't know that they've done as good of a job maybe as others as sort of being the lead dog of they've invested heavily in some autonomy companies. They've invested heavily in LLM and model companies.
Well, it just feels like they're dipping their toes rather than jumping in. Like Zuck, he's jumping in, spending 15 to 20 bill. And like, he's like, we have to do this now. For Amazon's very like, we're going to put pieces everywhere, a little here by there, but like no urgency.
Amazon makes money. So Amazon makes all its money on AWS.
AWS, yeah.
Amazon basically has two businesses. One makes the money and the other funds the innovation and the growth. So, they make their money. And so they also have to be somewhat selective. They don't have endless resources or as much cash flow, and they have a very cash intensive business. It's lots of supplies and goods and factories and warehouses and manufacturing facilities and cars and drivers and a million employees. Like they are, Meta as a revenue per head count, it does leave them a lot more R&D room, like NVIDIA. But I wouldn't say they're not jumping in. I would say because of the diversity of their business, they have so much optionality. Like, do they want to get into, do they want to build a telehealth and healthcare business? Do they want to build a grocery store, global grocery network? Do they want to remember they tried to kind of jump in both feet on the frictionless shopping experience and didn't fully take off. So I don't know if it's not at all, but they certainly are sort of a company that's cast between two roles. One being this kind of disruptor, cloud, AI, devices of the future, smart home category. I mean, they got the biggest smart home business in the world. And the other is like, we're an old, stodgy e-commerce company that ships stuff to people all day long.
So do you think that hurts them though? Because I think right now there's a massive talent grab for AI. I think all the brightest big brains are working for Metas, Open AIs, etc. The ones big brains aren't working for Apple because they don't innovate. So nobody wants to waste their years working at a company that just doesn't move. Do you think that narrative on Amazon is also preventing them from hiring the top AI talent in order for them to really get to that point in the AI race?
Remember, like a week ago, Meta wasn't going to get any talent either. That was the rumor on the street.
True.
Meta had also fallen behind. So I don't know. There's a lot of stupid takes out there. Stupid people with stupid takes that don't know what they're talking about. Zuck's going to invest in scale. He's going to hire it's at least 4 top OpenAI researchers in. It's $500 million, probably well spent against market cap to keep the market believing. that the company is ahead. They were also, they also built they built Llama and a bunch of the kind of open rails for open sourced AI software and services. And people were saying that they had totally missed. But it's like 1 week to the next. You shared something yesterday that said Gemini grew twice as fast as OpenAI last month in terms of users. Now, again, there's debates on whether that's the right number or someone else's their numbers are the right numbers. Bottom line is, we hear in a week Google's dead. It's like, I don't know how many posts I have to do. It says, HIMS will be fine, and Google's death has been, overstated. Like, people love that headline, and if you want to maybe even talk about like this news about Microsoft's chip, it's like it's always one or the other. Like, Microsoft delays their chip. This is great for Nvidia. It's like, it can never just be like what it is. It's like, this must mean there's some brand new TAM available to everybody else. Or it's just a possibility that they're going to wait 6 more months to try to get a better chip.
What is your take on the Microsoft news today? I'm curious too, because you're very in the weeds in that whole space.
I mean, my take is that the first Maya was bad. I think they used Alchip, was who they partnered with, if I'm not mistaken. Now, again, I got to look at the spreadsheet. Ray on our team could tell me this for sure. And the quality wasn't there. It wasn't up to par. These first few generations of custom chips are hard. It took a few generations of TPU. It took a few generations of Trainium and Inference and Chia before those that became good. And Microsoft got into the fray. They did their first few parts were largely kind of off the shelf. They weren't doing a lot of customization. They want to use it for mostly their own workloads. And this is what I've said, like, people do not understand this, but the XPU market is internal workloads. That's the volume of what it's for. Full stack, full software support, internal use cases inside of Meta, inside of Microsoft, inside of Google, inside of Amazon. They're not selling this to the customers that are building in their clouds. Okay, that's at least not most of the business. So Microsoft is already like the biggest buyer, I believe. If not the biggest, they're like one of the top 2 largest spender on NVIDIA. So people are like, oh, it's a big win for NVIDIA. I guess it's a little bit. I mean, maybe more inference will be done on the NVL72 systems that Microsoft's already stood up and will continue to stand up. But I don't know that there's like a bunch of new TAM that got created for NVIDIA. I think what's good for NVIDIA is that they continue to show XPU and custom rack scale is really hard. And the biggest companies in the world are really spending a lot of time trying to get it right. But none of this is to indicate that they're not going to keep doing it. Google's going to keep doing it. Microsoft's going to keep doing it. You can hear Oracle's going to do it. XAI is going to do it. Everybody wants to own their stack. And guess what? They can own their stack, and they can have $100 billion of revenue building out chips that are going to be their own stack. And there's going to be another $400 or $500 billion of merchant GPUs that are going to be built into rack scale systems that will be 90+% likely NVIDIA. So it's just a dumb take that like them delaying is all about NVIDIA getting more. I don't know that it has anything to do with one another. It just has to do with, this is where NVIDIA's moat is deep, is that they will always have the best and be in front. But in terms of these inference use cases, that's not necessarily an imperative.
No, I mean, I think you nailed it, because I think this AI race that clearly all the hyperscalers are battling right now isn't who builds the best models. Like, you see all these model scores, like, that's fine, that's cute, but it's about which company will be able to control their vertical, and that vertical is shrinking fast. So you need to really accelerate that. Find out if you can leverage the most amount upstream, and whoever's most valuable company doesn't depend on anything outside of their internal control will bear fruit in the coming years. And I think that's why you're seeing Meta like make these acquisition sprees right now, because they cannot solve data reasoning. Their reasoning model was really poor for Llama. So what do they do? Scale AI. What does Scale AI do? Data labeling. That's a massive component for reasoning.
And they also took out competition, because Scale AI was helping the
OpenAI and Google. Yeah.
So, I mean, there was a big part of it. Was a very strategic play.
Totally. And it was smart. Like, it was a great play for Zuck. But I think you're seeing another, I forgot what was the acquisition that Steve Jobs made back in the day, early iPhone. Like, he acquired a company that was literally, nobody knew this was going to be lumped into the iPhone, but it was that you can scroll with your finger. I forgot what the company's name is, but he made that acquisition and nobody knew it was going to be related to the iPhone. I think a lot of these acquisitions we're going to see in M&A this year, specifically Scale AI. Oh, data labeling. It's not just a picture of a tree and that's what the model is like. Oh, that's a tree. It's a lot more behind that. It's like reasoning on like mathematical problems on a photo, and you can solve it. that's like a lot of the data labeling that's so important. That's a highly, highly important component of the reasoning models. So I think there's going to be a lot of private market M&A. Great to see it. I think it's only going to just get started. And I do. Well, God, we run out of time, you and I, so quickly. Like I
told you.
I did.
Like, I don't know what we're talking about for an hour. I'm like, probably won't get through nearly as much as we'd hoped.
Do we what 3 names we talked about? I do want to talk to you though about AMD because you killed it on AMD. AMD has been on a tear right now, and I think the one of the takes that you had, which I fully agree with, is AMD's gains isn't a tax for Nvidia. The AI accelerator market is growing at a $500 billion pace. So just say that $500 billion market. NVIDIA is going to control 75 to 80% of that. All AMD has to do is get a sub 10% share, and they're going to be printing. I think something happened in that event that you went to 2 weeks ago in San Jose that had the market was like, oh, you're right. It's not a NVIDIA race. It's just give me a piece of the pie, and that's it. And now they're at 150 now. So like I'm gonna pass to you because you killed it on the AMD call.
Yeah, there's just so many dumb these. Like I don't know. I'm miserable with the amount of stupidity of what I read. But the takes are poor. I mean, 500 billion is like a conservative 2028 AI accelerator number. So I've broken this down a few times. I shared this yesterday. I said the bad take is that it has to be NVIDIA or AMD. It can be both. By the way, this is the same thing. I'm like, it doesn't have to be Robinhood versus SoFi. It's like this is the very small thinking that's keeping some investors from maximizing their portfolio. You can be in two. There can be 2 and 3. There's often 2 and 3 great names in any category. And by the way, they're not even always exactly competitive. But in the case of AMD, it's like, look, they're getting like 3 or 4% of the market right now, and it's like 5 billion a year of instinct, give or take. We expect the market to be at least 5 times the size. So assuming they just keep their current market share, no market gains, nothing. I mean, none of what they're doing actually helps them win more. They just keep the share they have. They're going to 5x their instinct business, which is really material to AMD's revenue and profitability. And that doesn't even count the fact that they got Pensando and all the networking technology. It doesn't count that, they're going to hopefully win some, training opportunities with now that, we've seen improvements in ROCm. And so you say, okay, if they could get from 3 to 5 to 5 to 7, 7 to 10, now it's 25 numbers to 50 billion. And all the while that this is happening, NVIDIA can still run to $300+ billion while they're only going from 5 to 25 to 50. They could be 300, they could be 350. And again, 500 is really not the ceiling. It's like the floor based on what we're seeing. And that's why I also say, like, we think about 100 billion of that's going to be custom. And that means that Broadcom will probably get 70 or 80% of that with their current wins. But Marvell could do really well. And everyone's like, oh, it can't be Broadcom and Marvell. Well, it could be Broadcom and Marvell. Like Broadcom could have 70 to 80%. They could have 70 to 80 billion of that 500, of that 100, the 25%. And at the same time, Marvell could go, their billion or so, billion and a half or whatever AI chip revenue could go to 10. They could go to 20. And it's like all these companies could go well if the high tide rises all boats. But everyone wants to be like, they have to pick the winner. The winner is the one with the biggest gains. The winner is the one with the biggest gains. And the biggest gains can come from, sometimes it's more than one name. I mean, I love conviction. I love concentration. That's how you make big money. I mean, Buffett will tell you himself in his own portfolio, only owned a very small number of names. But like, if you believe in the secular trend, there is going to be more than one company that's going to do well.
Totally. Everyone's going to get a chance to eat. Like it's so first off, all the spend it's really domestic. It hasn't really crossed the pond yet. It's like we're getting some sovereign spend right now, but Europe has a ways to go on their AI data center spend. Same with the Middle East. Middle East is just dipping their toes in. Like, I don't think people truly understand that AI is intelligence. And intelligence will touch every pocket of the world, and the world is massive, massive on the amount that they're going to have to spend in order to just get to the bar of AI. So I do think that it's kind of crazy to say, like, NVIDIA is probably going to hit $4 trillion next week. I think they're probably going to be the first $10 trillion company. And that dip, there's probably going to be some other dip again that's going to cause them to go down 40% from whatever political pawn they're going to be used in this compute cold war that I still think is probably going to resurface every couple years or every couple months, or that's like when like I was offsides. I will admit, for me, I was like, I want one massive company in my growth portfolio as my anchor. I loved Amazon because again, their retail is going to be cause them to be enablers of all these growth themes I'm bullish on: drones, physical AI, FSD, etc. But I've always underpriced Nvidia. I know Nvidia is the best company in the world, but and the most durable business in the world. Everything runs on their silicon. I should have just gotten like with Nvidia, because Nvidia is going to be the enabler as well for quantum, physical AI. Like CUDA is cemented into everything, and it's only going to stay. But yeah, that was my mistake. Again, I'm learning. I will say that maybe I don't just have to have one anchor. Maybe I could have two, because I love Nvidia so much. Um, but yeah, I know we're at the top of the hour. I want to give
You got to deal with the gyrations. I mean, it's double. It was down half of where it
90
was.
to 150. Yeah, it's crazy.
And so, but the point is like there was a lot of people that thought China was going to be the end of its demise. I mean, there was some dumb DeepSeek story this week that came out, or there's been a lot of dumb DeepSeek stories, but DeepSeek didn't destroy NVIDIA, didn't destroy AI infrastructure, it didn't take out OpenAI. China's, market does not stop NVIDIA from growing. The TAM is still very, very large. And by the way, Huawei's chips are not competitive yet. Maybe someday they will be. There's just a lot of bad takes. There's a lot of FUD. If there's anything I can sort of advise to everybody that's out there is it goes back to doing your own homework and do research and actually try to learn this stuff, and don't just take what you hear. The media wants the media wants to catch a view the way Shy wants to catch a bid. And so like they will publish stories that will be sensational but won't be accurate. There's a lot to know here, but the overall market, we're talking in the trillions. We're talking in the trillions. So AI will power every industry, it will power every company. Every company that will be relevant in 5 years will have made a major transformation of their business to implement and utilize AI. You will see software as we know it will go away. It will be abstracted in real time with agents. And the software industrial complex, we should talk about maybe next time we talk. I think a lot of the names that we've all become accustomed to that are leading enterprise software have a real possibility they won't be around in 5 or 10 years.
Yeah, AI tsunami's here. Yeah,
tsunami's here. Some will make it, some will be Blockbuster, and some will be Kodak. But ultimately, in the end, this is a really exciting time, and it is a little frothy. So again, not financial advice, but it's never a bad idea to trim if you are really happy with how your portfolio looks. So put a little on the side, but I'm about as bullish as people. I don't like to sell because I don't like to pay tax. So I just wait. So
it works. It works. When you find early disruptors, they keep compounding. But yeah, I do. Our next week is 4th of July, so we're not gonna be able to record next week. But the following week, I do want to talk about the bloated IT that's going to cause a lot of future blockbusters and Kodak companies out there that are gonna essentially be not needed as that middleware that's been printing, that's been benefiting on the not laziness, just like maybe the finessing on their IT people to CEOs of like, we need this when they don't really need it, type of thing. But either way, thank you guys. I think this was a great second episode. I appreciate Dane Dimes for giving us all his insights and wisdom. Enjoy the weekend. Things all-time highs.
you have some surprises coming, by the way. Don't forget. We're gonna be dropping.
Oh my god, the website will be live next week. Finally, weeks in the making. Futurum Equities. Go on the Twitter account.
FuturumEquities.com. But also, the next big Futurum, we can't tell you details, but we're going to be announcing our Cyber 7, right? Pretty soon.
Yes, Cyber 7. I'm so bad with announcements. Oh my god, everyone. I am
Yeah,
just all about
you gotta get, even though he's got all these followers, he doesn't show himself that well. Just wait till I take full on self-aggrandizing. We're gonna get you there. You got that great hair. We're gonna teach you how to be a great self-promoter too.
All right, I'm gonna try this now. Okay, Cyber 7 is coming next week. You guys know my thesis. AI agents are here. It's going to cause an explosion of data. What do you have to do with that data? You've got to protect it, and no CTO will cut spend in order to save a couple change on their defense. It's going to have a long runway, but it's also one of the most competitive industries out there with a ton of bloated names. So we're picking 7 that will be the early disruptors that will survive this AI tsunami. So tune in until next time. Appreciate it. Have a great weekend and enjoy some sun out there, everyone.